Senator Reed of Rhode Island is recognized.
Well, thank you very much, Mr. Chairman. And I would note that the Federal Reserve recently approved synthetic risk transfers in which banks use derivatives to reduce their capital requirements by shifting risk of losses onto private equity funds and hedge funds. Having survived 2008 and Dodd-Frank, when I hear derivative, I get nervous. When I hear synthetic, I get very nervous. Mr. Barr, what are the risks to the financial stability of banks that are permitted to engage in these synthetic risk transfers on a significant scale, and what guardrails are appropriate to protect the financial system and ensure that we don't relive the past?
Thank you, Senator. It's an important question. We looked carefully at these sets of transactions. The transactions are different from transactions that we permit by rule under the existing authorities to offset credit risk that banks might face. We wanted to take a careful and cautious approach with respect to these transactions. So we have approved them on a case-by-case basis subject to limitations. We're going to wait and see how those instruments perform. If they perform as intended, then they might be more generally available. If we see risks arising in those transactions, then we would limit their use for capital mitigation.
How much visibility do you have in the private equity and hedge funds that are involved in these transactions?
We have very strong visibility into the bank side of the transaction. That is, how the bank engages with third parties with respect to these risks. We'll be monitoring those risks. We have, of course, much less visibility into hedge funds and private equity funds. That is a longstanding issue in supervision.
Well, I think you have to have a really good perception of both sides of the transaction to conduct these, because there's a possibility that a private equity firm could be undercapitalized or mismanaged, and the transactions would fail.
In these particular transactions, Senator, the transaction that we approved, the cash is actually provided up front to the bank, and then it diminishes over time as the credit continues to perform. So in these particular transactions, I agree with you that that's a general concern. But in these particular transactions, the cash is actually provided at the beginning of the transaction rather than at the end of the transaction.
Thank you. Ms. Gruenberg and Mr. Wu, do you see any risks of the financial system in these types of synthetic risk transfers?
I think there is considerable uncertainty, and we need to approach it with great caution and attention, Senator.
Thank you. Mr. Wu? Sue?
I agree. They do require heightened attention, especially when risk transfer is thought of as risk elimination, which it is not. However, when done appropriately in a safe and sound manner with controls, it can help to be part of an effective risk management program, but that does require a careful look.
Let me turn to another situation, the rent-a-bank situation, in which banks partner with non-banks to provide deposits and loans. And these arrangements can facilitate evasion of state usury limits and other important consumer protections. In fact, I think that's why they have these rent-a-bank arrangements. Mr. Gruenberg and Mr. Sue, can you provide an update on what you're doing with respect to these rent-a-bank situations? Mr. Gruenberg?
Yeah, thank you, Senator. You raise an important risk management issue for banks. These third-party relationships carry a lot of risk. And when a bank partners with a third party and that third party is carrying out services of the bank, it's as if the bank itself is doing that directly and the bank is accountable for it. So the management of those third-party relationships are really quite important and carry a lot of risk with it. The challenge here in part is the ability of states to export their interest rates to other states and circumvent the usury laws. And that's something we're giving some attention to.
Okay. Mr. Sue, quickly.
Yes, so predatory lending has no place in the national banking system, whether done directly by banks or in partnership with fintechs, and we made sure of that.
Thank you very much. Thank you, Mr. Chairman.